Hello again. Welcome to another episode of the Uranium Market Minute. Today is Wednesday, April 6th, and this is episode number 100. My name is Justin Huhn. I'm your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. As always, before we get into today's content, nothing in this video is intended to be investing advice. I am not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, well, we made it 100 episodes. Really grateful to be able to have this platform and to have such a great audience. So thank you so much for tuning in. If this is the first episode you've seen, welcome aboard. I really do appreciate you being here. And if you've watched since episode 1, thank you sincerely from the bottom of my heart. It means a lot. Not a single day goes by that I'm not grateful to be able to do what I do and to have such an enthusiastic audience, especially here on YouTube. So with all of that said, a very interesting day in the uranium space with some very good news coming from Sprott, which I'm going to talk about in the mailbag section. Why don't we run through the daily scoreboard really quick, take a look at the charts, and then we'll dive into some content that I think is very appropriate for this 100th episode. So starting off with the spot price of uranium, it's definitely rocking. It's moving up consistently now. We're now sitting at $63 a pound. This is at 11-year highs for the spot price of uranium. The recovery is in full effect all across the fuel cycle, which I spoke about yesterday in episode 99. And it just continues to move with SPUT driving that train at this point. But now, of course, we have the utilities on board and participating in this run. It's not just the financial vehicle. It's not just financial players controlling this while they are the biggest purchaser end user, as it were, in the spot market. They're not alone there any longer. So that's a really good sign. Yesterday, SPUT purchased an additional 16.5, they raised an additional 16.5 million. They purchased an additional 300,000 pounds of uranium year to date. They have purchased 12.7 million pounds and have raised 715 million in new capital. The NAV of SPUT now sits at 3.37 billion. Remember, when they took over UPC, the NAV was at 600 million. Unbelievable. That is now almost 6x. That's over 5x in the net asset value of this vehicle in less than a year. So Sprott is doing a fantastic job, very intelligently managed and driving the sector forward very strongly. So yesterday they did close at a slight discount to NAV, down 2.45% negative discount to NAV. Of course, the trusted trade up strongly today. Now SPOT was moving up, but perhaps they did raise some more money today as we saw decent volume and a nice move up. They're sitting on 86.4 million in cash, and since last August they've raised over 1.7 billion in new capital since last August. So they're about halfway through that 3.5 billion initial ATM allowance. Turning to the ETFs, neither URA nor URNM reported any change in outstanding shares, but these vehicles continue to have money flow into them consistently, especially with URA. The combined AUMs, the assets under management of these two ETFs, has increased by an astonishing 1.1 billion year to date. Amazing moves. Money is flowing into these puppies just consistently day over day over day. So now the joint AUM sits just below 3.0 billion, $3 billion, 2.95 in AUM for URA and URNM combined. All right, why don't we take a look at the charts here? Starting off, as we always do with URA, nice hammer candle printed today with the dips being bought. Decent volume happening here. Notably, we are about to have a bullish golden cross here, the 50-day crossing above the 200-day. This is something I always watch out for. This is not a slam dunk technical indicator, but it is a technical indicator that tends to follow through. What do I mean by that? When the 50-day, the short-term moving average rises sharply above the longer-term moving average, the 200-day, that indicates a short-term trend. And if you look at both moving averages moving up, especially the 200-day moving up, that is a long-term trend. Now, when we have a bullish golden cross, when the 200-day is flatter moving down, I tend to not give it much significance. So the overall direction of the 200-day really is the overall trend. And now, while we did flatten out with this correction from late November through end of January, we did see that the 50-day lost the 200-day, but the 200-day was still moving up during that occasion. Now the 200-day is moving strongly up. The 50-day is sharply about to break through that. That is a nice bullish signal. And of course, we remain within this long-term bullish Livermore accumulation cylinder, as it were, with volume increasing substantially over the last couple of months for this vehicle. So overall bullish chart, nice to see a positive reversal in today's trading, and looking good for URA. Sprott Physical Uranium Trust just absolutely up on stilts, up almost 4% on the day. So they likely were raising more cash today, although spot was up. So I don't think they were at a greater than 1% premium for a significant amount of time. But either way, as we know, whenever they are at that greater than 1% premium, they are in there issuing shares into the open market, raising cash, and they continue to buy in the spot market relatively heavily. This is just an absolutely bullish chart. Now, we said for months during this consolidation, from September all the way into February, that this would break out in the direction of the overall trend. The overall trend is up, and that is exactly what happened. Now, of course, this is not just some random stock. This is a trust that follows the movement of the spot price of uranium for the most part. Now, it does trade independent of the spot price of uranium. We know that we've seen pretty substantial premiums to NAV in November. We did see, or excuse me, that was late September. We saw, close to a 20% premium to NAV for a minute there. Of course, that corrected hard the following day. And we have seen about a 10% discount to NAV on some of these dips. But for the most part, this is essentially a chart of the spot price of uranium, which is moving up clearly. Let's take a quick look at Cameco, kind of a sector leader here. Has been selling off on a little bit of weakness the past few days, also printed a hammer on the day. Now, if we look at URNM, which just was officially taken over management by Sprott Asset Management. That's what I want to talk about in the mailbag section, but I want to highlight this chart for a similar reason. Now, we've seen an underperformance in the equities, generally speaking, compared to the spot price of uranium. And what is URNM? URNM is essentially a basket of the equities. It has been influenced significantly by the underperformance of Kazatomprom. Kazatomprom generally trading weaker than most of the sector. At least recently, it had been trading very strongly. It's the obvious value play, of course, but with geopolitical situation as it is yet to catch a bid due to any sort of clearing of concerns around the geographical location of Kazakhstan, the shipment of the material, et cetera, et cetera. So with a 15% holding of Kazatomprom and URNM, that definitely has been a bit of a ball and chain, but this essentially is a basket of equities. Now, look at this chart, same thing. We're about to see that golden cross, that 50-day rising sharply above a rising 200-day. That's coming. Volume is stepping up here. I think we're on the cusp of another big move for the equities in the space across the board, and especially in URNM and URA. All right, so let's get into the mailbag section. Again, I'm not going to address a question here, but just want to talk about something that has officially been confirmed today, and that is the takeover of URNM. URNM is an ETF that started in December of 2019 at $3 million in assets under management. Okay, 3 million, and they took it over $1 billion in just over 2 years. They did a fantastic job. So congratulations to Tim Rotolo and the rest of the team. Congratulations, you've really done a fantastic job with this vehicle. It's 100% pure play uranium, and it's really the ETF of choice. Now, URA tends to have a bit better liquidity. I think that's about to change with Sprott at the helm. And URA does have a deeper options market. That's something we're definitely looking out for here with URNM. Will we see URNM do a stock split to improve the liquidity? Will we see an improved depth to the options market in URNM? I would love to see both things. So we'll have to see how that pans out. We have a talk tomorrow with CEO John Ciampaglia. We will be issuing either a bulletin or an update this coming weekend about that conversation to members of Uranium Insider Pro, giving some more detail on Sprott's plans with this vehicle. But I just wanted to mention that because URNM is a great vehicle, and now that Sprott is at the helm, this is very important to understand. Okay, so why? Sprott has a huge client base that they can market their securities to. They do so with all of their physical trusts, with their gold, silver, platinum, palladium physical trust, with their uranium physical trust. And now they can add a ETF that is a basket of equities exposed to uranium, 100% exposed to uranium, to their list of managed vehicles. And they can say, okay, here you go, Mr. Institutional Hedge Fund that wants to position in some Sprott products. We have these two products right here. We've got one, take a seat when the equities, which tend to outperform and have greater leverage to the sector than the physical commodity. And here we have this highly liquid physical trust where you can have safer exposure to the pure commodity. And bonus, you put your money in that, we buy physical uranium, which tends to move the rest of the sector, including your position in the Sprott Uranium Miners ETF, which it is now going to be called. It's a 1-2 punch. That is what is coming down the pike. And it's a big deal for Sprott to be taking over this vehicle. We've spoken about this for months now. It took them a while for them to get that 50% shareholder voting approval of this transaction. Why? URNM is very widely held by retail investors. The date of record was December 15th. So whether or not you own it now is sort of irrelevant. If you owned it on that date, then you could vote. So they had to do a huge outreach campaign between North Shore, between Sprott, myself, John Quakes on Twitter, really been pushing for just to cast the vote, not pushing the vote in any direction, but I believe they had it over a 90% yes for Sprott to, in fact, take over management of this vehicle. So congratulations to everyone involved. And if you are exposed to this sector, if you've been watching these videos, if you're interested in the uranium thesis, this is a very big deal. This is a catalyst that not many are paying attention to. Most retail traders are saying the spot price is moving up and my equities are going sideways. They're not paying attention to these other fundamental factors that tend to have a bit of a lag time, but move things in the long run. And that's why we're exposed here. Okay, so I have had some questions come into me about why are the equities not moving along with the spot price? Okay, so there's a number of reasons, and none of them are really worth being alarmed about. But generally speaking, the equities will move up and down, even with a rising spot price movement. I wanted to show you some historical patterns that I think are relevant to what's happening now. Let's take a look at Laramide Resources. Laramide was a company that came on the scene back in 2001 when the uranium price basically bottomed in late 2000s. So they started the company really at the bottom of this previous cycle for uranium. The stock essentially traded sideways, had very minimal moves. It was a penny stock for a couple of years. Then what happened? A big bump up on big volume as the spot price started to recover. Now, this was a super contrarian trade at the time, but the spot price continued to move. So I want to show you, Laramide went from, at the beginning of this run, 20 cents, less than 20 cents, and it topped out at $16. This was an absolutely monstrous stock to hold for that previous run. But I want to show a couple of historical examples I think are relevant to what's going on now. Okay, so this period from February of 05 to July of 05, about 6 months, Laramide traded sideways. It had a big move up. It moved from just under $1 to almost $2. So it had a move up. It almost doubled in the course of 3 weeks. Okay, it broke out really big, and that was again after and during this period of consolidation. By the way, late 04, early 05, the spot price continued to move up, however slowly. Then a big price move up, and boom, Laramide jumps up. Now we have this 6-month period where Laramide is trading sideways. Why? We have a consolidation. We have some profit taking, regardless of how great the sector is looking at the time and how the spot price is moving. During this time where Laramide, not only did they trade sideways for 6 months in this pattern, it corrected by over 40% during a period when the spot price was moving up. This 6-month period, the spot price moved up by 36%, from $22 to $30 a pound. Now the spot price bottomed less than $10 a pound in late 2000. So these are big moves in the spot price of uranium with the equities going sideways. You can't always just take a snapshot of the present moment of what your stock is doing. You have to zoom out. Zoom out. You have to go back and look, okay, where were stocks trading in the later part of last year in November? Okay, the stocks were on fire. They likely were overvalued relative to spot price then. They probably were. So some correction happened. Stocks continued to correct December, January. And what was happening then? The sector continued to look more and more bullish. The spot price was holding firm in the mid 40s. So we have a bullish situation where we have equities pulling back, recovering, trading sideways, and finally starting to make a recovery like I just showed you with those URNM charts a minute ago. Again, Laramide makes a monstrous move from just under $2 up and peaking out at about $7.50. Okay, so it does a good 3 to 4x in a matter of months here. Then what happens? Profit taking, sideways chop. How long? A year. October 05 to October 06. By the way, during this period of time, the S&P rose by 13%. Okay, so this was not a bear market by any means in the broad markets. This was full on bull market for the S&P 500 during this period of time. And so Laramide chopped sideways for a year. What happened to the spot price? It went from $33 to $55 a pound. Okay, it moved up over 50% during this period of time when the equities chopped sideways. We all know what happened from that. After making already enormous moves from 20 cents to 7 something dollars, it did another double. Okay, so, and of course we've had periods of consolidation in a number of these stocks during that period where the overall trend, so the spot price during that period was essentially going like this, right? Just this whole time, it's just going up consistently. Rarely did it pull back, maybe a dollar here, a dollar there, but it was going up the whole time, and the equities are going to chop. You were always going to have profit taking. You're always going to have some sideways consolidation. It's healthy for charts to correct and consolidate. And if the overall fundamental picture remains strong, or in our case, presently, continues to grow more and more bullish practically by the day, then you know what to do with your stocks. If you are all in, just tune out the noise. Maybe don't even watch these videos that I update every day. You might want to just tune out. Look at weekly charts. Don't even touch that daily button on your charting software. All right. Look at weekly charts, period. You obviously want to keep abreast of what's going on in this sector because the fundamentals matter, because of course it's very, very volatile. And at any point we could have some exogenous event that does hit the sector in a negative way. There's always that chance of a nuclear disaster, okay? God forbid. And we don't believe that's going to happen. Statistically speaking, it's highly unlikely. And if not, then of course, we think we're looking at multiple years of a very bullish setup for uranium here. So I just wanted to cover that. Be patient with the equities. The equities are coming. And in my opinion, I believe that Sprott taking over URNM, which essentially is the equities, that might be marking the bottom in terms of equities versus the spot price of uranium. I give detailed analysis of this every week in the weekly watch list for Uranium Insider Pro members. I'm going to talk about this in depth this weekend on the weekend watch list. And but in my opinion, I think that this is a turning point for the equities. Very excited for what's coming. All right. Thank you so much. Again, 100 episodes. I'm looking forward to the next 100, and I do appreciate you being here. Thank you for subscribing to the channel. Thank you for your support if you are a member, and we will see you again tomorrow. Take care. Cheers.